Quick reminder, if you're a business owner or self-employed, the next few weeks are going to be one of the most important tax window of the year. Missing this one can cost you penalties, interest, and unnecessary stress. Hi, my name is Dhirendra and I am a co-founder of W-2 Tax. My channel is dedicated to help small business owners and entrepreneurs avoid costly tax mistakes before they happen. In today's video, let's start with Q4 estimated taxes, because this is where I see one of the most common tax mistake. And honestly, this one feels almost unavoidable. You're just coming out of the holidays and barely starting to get back to work. You are getting busy with day-to-day operations of the business, worried about sales, marketing, installations, deliveries, and much more. In your mind, you're thinking, I have time to file all the 1099s and W-2s, and we have time to take care of the IRS deadlines. Wrong. You see, when April 15 comes around, people are ready with their checkbook in their hand, preparing to write a check to the IRS just to get them off of your back. Not so fast. Here's the problem. Many people misunderstood when estimate taxes are actually due. Let me explain. If you are self-employed, a contractor, you have some rental properties, or you own a pass-through business, Q4 estimated taxes apply to income earned in the last part of the year, especially income earned between September 1st and December 31st. According to the IRS, once you have calculated that income, they expect that estimated tax payment by January 15, not April 15. Most people don't realize this. They assume they can just fix it when they file their tax return in April. But by that point, it's already too late. Penalties and interest have already started to add up. Even if you file your tax returns on time, the IRS expects you to have a fairly accurate record of your income by end of the year, or at least by January. That's why the January 15 deadline matters so much. I see these mistakes all the time, and honestly, I have made it myself for years before I fully understood how this works. 2. What happens if you miss the January 15 deadline? You see, if you don't make the estimated tax payment by January 15, the IRS can charge you penalties and interest. And this surprises a lot of people. Even if you're not late filing a tax return by April 15, you can still owe penalties because the tax should have been paid earlier. That's why these deadlines are highly important, because they can add up penalties and fees that most people never should have paid in the first place. So how much should you pay? A lot of people have no clue of how much money they are supposed to pay. In reality, the IRS expects you to pay whatever amount you paid the last year, at least 90% of what you have paid, or whatever you think your estimate tax is going to be. There are several conditions to where they can add penalties and fees, and there are some exceptions. All you have to remember from the reminder point of view right now is you need to make your estimated tax payment by January 15. So how much should you pay? If your books are up to date, your CPA or your tax professional should be able to calculate your estimated tax without much difficulty. And here's the important reminder. If you are unsure, it always is safe to pay a little more. Any overpayment can be refunded later. But if you don't make the estimated tax payment at all, you are almost guaranteed to pay penalties and interest. Missing this deadline can cost you thousands of dollars over time. Now, right after estimated tax comes something many business owners underestimate, and these are the employer filing deadlines. Employers are required to prepare W-2 for employees and 1099 for the contractors. These forms must be filed with the IRS and delivered to the worker on time. This is an optional, and the penalties for missing these deadlines or filing them incorrectly can add up fast. This is where many businesses get caught off guard. Every year, we see several business owners paid contractors but didn't track them properly, misclassified workers from a 1099 to a W-2 and keep it all mixed up, don't collect W-9s on time, or wait until the last minute and rush for the filing. The result is IRS notices, corrections, penalties, and a lot of cleanup work that could have been completely avoided. This isn't about panic, it's about awareness. I don't want to panic anybody. You should not be panicked. It's about awareness. Q4 estimated taxes, W-2 and 1099 deadlines are predictable. They happen every year. The businesses that handle them calmly are the ones that already know their numbers and keep their records clean. Here's the takeaway. Make the estimated tax payment by January 15th without forgetting. Even if you overpay, the IRS will refund you the money later on. But if you don't make the payment, you're going to be on the hook for penalties and interest. I hope this helps you avoid a very common and very costly tax mistake. I'll see you guys on the next one.